Hello everyone, welcome to the Ichimoku daily analysis for gold for Wednesday, December the 8th, 2010. Well, a continuation of the trend to the downside today, and we highlighted yesterday that we had a potential Japanese candlestick bearish engulfing pattern, and that change of trend, that reversal pattern was confirmed today with the market making a lower high and a lower low. Now, a fairly bearish candle as well. If we look in bar chart terms, the size of the range is actually extended. The range is the difference between the high and the low, and that's a good sign that that extends as a market trends in a certain direction. In this case, it means that the bears were increasingly eager to take the market lower, and the size of the red body is actually increased, and it tells us that the sellers made net bearish progress on the day between the open and the close. They made a significant amount because the size of the body is quite large, and also it's larger than the previous day, and that's what you like to see in a downtrend. The only worrying factor for this market is the longish shadow on the bottom of this candle, and that represents upside price rejection and the sellers losing some commitment as they traded throughout the day. Now, they could only manage to close the market just down below the midpoint level, which means that they did close this market with control. It was only fairly weak control, though, and they lost commitment, so that could be significant. Although the trend is down, and it still the market does have some good downside momentum in this first time frame. Now, the market actually found support down around the Kijun-sen and tested down below that area and failed to close down below there. So that's an important area of support for the market over the next trading day. But the market did close down below the Tenkan-sen. So closing below the Tenkan-sen means that the market is negative or bearish in the fast-term time frame. By closing just above the Kijun-sen, it means that the market is bullish, although it's not very far above, so it's bullish to neutral. But the market, however, is still trading up above the cloud, and that's quite significant. It means that in overall big picture terms, the market retains its overall positive bias. Now, if the market does continue coming off, then we do need to watch the potential support down around 1350, and we can see here how the market tested that area previously, and we saw buyers coming in and the market rallied significantly from that area, so that's important. Certainly if the market trades a bit lower, we've got very strong support all through the cloud, and that extends from roughly 1336 down to roughly 1300, a round number. So very strong support down below. Obviously overhead, there's not a lot of resistance, but these major swing highs are very important and will offer potential resistance for the market. The first area is around 1425 roughly, and then the next was the previous day's high around 1432. So obviously for the next day's trading, the low of the current candle becomes very, very important for a continuation of the trend to the downside. Fairly bearish market, so if we do see that area taken out, then there's a likelihood that the area around 1350 will be tested.